A big thing with these funds, the high yield dividend funds, is people are worried about the worst case scenario and why they are scared to invest in them. Well, if we look at here at Tsly and OARK, the worst case scenario is being played out in front of your eye, and it should give you a ton of confidence, or at least it does me, with these funds going forward. Let's talk about it. This is Mike, the tactical stock scalper. All right. Let's start off here with Tsly. Well, the worst thing that could happen to these funds, right, besides the underlying going to zero, but I don't think anyone expects that to happen. But what we do see here is Tesla, we'll go to Tesla chart in just a second, has been breaking down since June, right? As you see here on Tsly, it has followed it down. Now, the big problem with these funds, right, is as they go down over a period of time, the price goes down, right? And then you have the dividend drop, which also pushes the price down. So it's like a double whammy, in essence, when these go down and their underlyings go down. So it looks like there's no escape and this thing is going to go to zero. But if this is the worst case scenario, okay, I'm very confident in these funds. So here we are with Tsly, just constantly dropping, right, with share price. And the reason for that is why? Because let's look at Tesla since this period. It has gone down, right? So since that has happened, Tsly has gone down and has also got the double whammy of the dividend drop along with it. But now what we have is Tesla starting to break out above 250, and maybe we're going to look for a big move from Tesla. If this is the worst case scenario, what we're witnessing right here with Tsly, this is absolutely incredible, and this is great. What a massive buying opportunity for Tsly shareholders this past month and a half. Just look at this. Now, if Tesla starts to go up, these guys are going to be very, very happy. Let's kind of take another example here, and let's look at OARK and dive into this a little bit more. OARK, pretty much the same thing as Tsly, right? The underlying has gone down. Therefore, OARK has gone down, right? But because the fund itself is starting to stabilize and go back up, right? Here's the drop, and then it comes all the way down here. Now it's rising right back up. Now, OARK hasn't risen nearly to the level of back to this level up here that ARKK has. See, so let's kind of look at this. Right? Not really even close, right, to get back up to the 17s if we're going to compare underlying to the high yield ETF. But we are seeing some share price appreciation, which is great because that means you're getting back to your initial capital. That means the price of ARKK is rising, which means that there's going to be more money for dividends for the shareholders of OARK. And again, if this is the worst case scenario, which I think it is, being played out, this is fantastic. Let's look at another fund here. Here we go. Let's look at QQQY. And what I love about these so far is here was a bad situation right here, okay? The markets were going down on QQQY. We had the dividend drop, right? Forcing the price even down further in QY. As you see here, as you scroll down, as QY is going down, we had a big dividend drop, right? Which really put the price below 1750. And then what do we see? The market's going back up and QY following it. Same thing here. Markets were going up, but we had the dividend drop, and now QY is going back up. I think these funds are beautiful. I think I'm very safe investing in these and putting more money in them because I think, again, we are witnessing what the worst case scenario will be. Now, particularly, it's even better for funds like QY, IWM, and JEPI, because the markets are not going to go to zero. Is there a chance Tesla could go to zero? Well, yeah, a very, very, very small chance, but there is a chance it could go to zero. But I think this is a worst case scenario, and what we're seeing is these ETFs coming out of their worst case scenario and starting to be fine. Let's look at another one. Let's look at AMZ. We had Amazon and the markets coming down from this period starting September 15th and really dropping hard. And we see AMZ dropping down here to 1830. And now it's crept back up because the markets have crept back up and Amazon has come back up. Guys, this is really, really fantastic news. Let's look at Apple. Same thing. Worst case scenario being played out right in front of your eyes, right? I think we can all agree we don't expect Apple to go to zero, right? So worst case scenario, if we're not going to talk about it going to zero, is the underlying plummeting, which Apple did. Look at it. Came down here, dropped there to 1782, and now what do we see? It coming right back up. It's awesome to watch these worst case scenarios play out in front of you and then watching the recovery. Let's look at GUI. Then we're going to look at Google. This one's a little different. We have a worst case scenario playing out currently. Like we've seen some of the others starting to rebound for their worst case scenario. Now I'm watching GUI and Google, right? So what we have here is GUI just dumping on a worst case scenario, right? Here we are at what? 1757, the low right there. Let's look at Google. Oops. And I know I'm a little all over the place with this video, but I kind of want you guys to see what I'm thinking. Okay. This one's a little different, and this one has me a little perplexed. Worst case scenario was happening as it was going down, right? As Google was coming down in October, and then getting a rebound back up. Let's just kind of look at this time frame. Let's look at GUI. So this was a little different. We're not getting, so there's the drop like we saw with Google, right? But we're not getting it to go back up. So what we're seeing here is the dividend drop is hurting it here at this point, right? So we're going to go back to Google. Google kind of staying here. We're looking for a rise up from Google as it bounces up from its 100 period moving average here. But I'm really interested to see what happens with Google and if GUI will follow it on the way up. So this chart is not corresponding to its underlying. One more time. Look at GUI now, right? And then let's look at Google. Not really following it like it should. And I don't have GUI, nor do I follow it. So I'm not sure why the charts have such a differential. But they definitely do. GUI does not look like OARK or Apple or Amazon. For some reason, it's not following it back up. See, so let's look. Here's Apple coming right back up. Let's look at Apple. Right. We have Apple, right, dropping and then coming right back up. We have Apple dropping and coming right back up. We're just not seeing that with Google, and I'm not sure why. So despite Google, everything else, when a worst case scenario plays out, like Tsly, they all tend to rebound back up following the underlying, albeit not to that level. I know I was all over the place with this video, and I hope it made sense to you, and I hope the thought process came across that to have confidence in these funds, as I am having more confidence in these funds. And trust me, guys, I've been very skeptical. But I'm really liking what I'm seeing, and I'm enjoying watching the worst case scenarios play out and then watching the recoveries. This is Mike, Tactical Stock Scalper, out.